Very good morning, Mr. Saeed, and thank you so much for your time. And firstly, congratulations on this milestone. AUM has crossed 13,000 crores after a period of moderation. But from here on, how do you see industry trends shaping, and how do you see growth normalizing in the second half specifically?
Yeah, good morning, Shrishti. Thank you for having me here. I think, first of all, this is one thing that I would like to mention is has been a calibrated strategy for us during the challenging previous quarters, the entire year actually. We were maintaining our AUM, even though the industry has kind of declined in a sense that AUM has corrected from 4.4 trillion to 3.5 trillion. Our AUM remains steady, and we have consistently built our portfolio over the last quarter and in the quarter one and two as well. And we have now reached to around 13,000 crores of asset under management. And we are working on a calibrated strategy of diversification, under which we had introduced an individual loan product. Along with that, we have also introduced loan against property and gold loan as a product. The individual loan portfolio has crossed 1,000 crores. It's a significant milestone for a new product that we had just started in last 6 to 9 months period of time. And it is also behaving really well. And I can comprehensively say that the worries of the past are behind us. Whatever challenge was there, I think that has now been corrected. The over leverage situation, which was uh, affecting the microfinance environment, is pretty much under control. If you look at the industry data, around 20% of the customer were having more than four loans in June 2024. Come to September 2025, that number has reduced to less than 5%. And as far as Muthoot is concerned, that number is below 2%. So from that perspective, the growth is there. The asset quality is improving. There is improvement in collection. We are getting good support from banks. Our rating has also been improved. CRISIL has improved our rating outlook from stable to positive. We are now CRISIL A plus stable. So that way, I think microfinance has turned a corner, and we are looking at growth as well as good profitability in the coming quarters.
Okay, Mr. Said, good to hear that. So, would it be fair to say you're on track for that 20% AUM growth guidance that you had guided for earlier? Is that achievable?
Yes, very much. We are on track for that. And all the other parameters also in terms of our guidance on NIM, which we had guided from 12.5 to 12.7%. We are on track for that. In terms of asset quality and the credit cost, we had guided at around 4 to 6%. We will be better than that. We will be below 4. And in terms of our return on asset, we have guided from half a basis point to 2% a range, because there was certain uncertainty. We will be closer to the upper range of our guidance. So on all the parameters which we had guided, we will be sticking to that, and we'll be achieving those.
All right, but Mr. Saeed, if you can help us understand that in which loan segment do you believe that most of the growth will come in the times ahead, and what factors could lead to that?
Yeah, so one significant change that has happened is RBI has liberalized the qualifying asset guideline for microfinance institution. So earlier there was 75% asset had to be qualifying asset, and 25% could be other assets. But now that has been revised to 60% qualifying asset and 40% other assets. So there's a additional room of 15% of building new assets in our book, and which is what we are utilizing. And considering this 40% headroom that is available, we have introduced three products, which is individual loan, which is for a loan between 1 lakh to around 5 lakh unsecured, but to customers who have a proven track record and a credit score of 700 plus. And we are looking at LAP, that is loan against property, which is around 5 lakh to 10 lakh rupees segment. And there are working capital loans like gold loans that we are providing. So all these loans are seeing a good uptick. Individual loan, as we have mentioned, it has crossed 1,000 crore AUM, and we are disbursing almost 350 crores per month. So we are likely to reach around close to 2,000 crore by end of the financial year. And a loan against property also, we are hitting a traction of around 10 crore disbursement per month. That portfolio will also be close to 50 to 75 crores. Overall, as we had guided that we would be around 12 to 15% of non JLG book. We are on track for that, and that is improving the asset quality as well and improving the growth aspects also. So growth is coming from them. And most important aspect of these loans are these are completely digital in a sense that the disbursement is directly into the customer account, and even installment collection is directly through the eNACH. And so far, we have seen zero default in these loans. So this is helping us to improve our asset quality and bring the credit cost down, because of which our the margins are also improving and our profitability is also improving.
Okay, and Mr. Saeed, portfolio yield is improving, the cost of borrowing is going down. Tell us what impact that is going to have on your NIMs, and that slightly above that 12.5% NIM guidance that you had given earlier. What's the outlook over there?
So last quarter, we had seen an improvement of our net interest margin from 11.5 to 11.9. This quarter, this would be further enhanced. We will be crossing around 12% in terms of our net interest margin. And by end of the quarter, we will be in the range of 12.5 to 12.7, which we had guided for. And it is coming about from two aspects. One is, of course, the cost of fund has gone down for us. We are able to negotiate with the banks better. We have diversified our sources of capital. We have also done an NCD issue with a global rating and listed on INX exchange, where we were able to get development financial institution giving us funds for a long-term basis. So that is one aspect we are able to. Plus, banks are also have started passing on the rate reduction, the policy rate reduction. It generally happens with a lag of around 6 months. That is now started to trickle down, and we have seen that correction also. So one aspect is the cost of funds are coming down. The second aspect is because the asset quality is improving, the number of NPA loans are going down, so the yield on overall portfolio is improving. And the new loans that we are doing at around 23.5% and 24.85%. So that has also helped to increase our yield. So on both the side, we are getting benefited. And on the bottom line side, both operating expenditure is getting rationalized as we scale up and as we utilized, and whatever we have invested in terms of the newer product are getting utilized better, so that OPEX is coming down and the credit cost is coming down. That's why the return on asset is improving.
But any number, Mr. Saeed, that you can help us with when it comes to ROA and ROE numbers? Because I believe there too you have guided for an improvement.
Yes, we had guided for around 0.5 to 2%, which is a wide range in terms of an ROA, but I'm very confident that we would be towards the upper range around 1.75% on the ROA, and that will translate, depending upon the leverage, around 10 to 12% ROE.
All right, Mr. Saeed, with this, we let you go. So good having you on the channel today. Thank you so much for your time.
Thank you very much. Have a good day.
All right, same to you.